Nasdaq Incorporated is teaming up with a group of banks, including Goldman Sachs, Morgan Stanley, to spin out its marketplace for shares of private companies. Under the deal, Nasdaq Private Market will be moved into a separate standalone company that will receive investments from the group of banks. It also includes Citigroup and the SVB Financial Group, which is the owner of Silicon Valley Bank. The companies announced the deal earlier in the week after it was first reported by the Wall Street Journal. Joining us to get some more color on this, Ayodeji Osibana, Head of Training and Development at AudaCity Capital, joins me from the UK. Ayodeji, thanks so much for joining us. How do you see the purpose of what the Nasdaq private market is trying to achieve here?
Good afternoon. Thanks for having me. What I think the main benefit is these investment banks teaming up with Nasdaq brings a lot of liquidity into the market, a lot of distribution as well. Some of these investment banks have clients from Silicon Valley and a lot of accredited investors. So this will make the Nasdaq exchange a dominant platform in terms of moving forward with IPOs. And you have a lot of companies who are waiting on the back end to take advantage of this opportunity, because Nasdaq has got certain rivals like EquityZen, Clarinet, and a few other companies. And what Nasdaq has got in terms of the advantage, unlike the rival companies, is that they offer fast liquidity, and the transaction fees will be a whole lot cheaper and faster, unlike their rivals where there's high fees in swaps and buying and selling costs. The swaps are kind of like fixed as well, and again keeps a lot of legal paperwork at hand that delays the transactions, whereas the Nasdaq platform will be more liquid and swift and easy going, which will attract a lot of investors to participate on this new platform.
All right, thanks for that. So, so that's Nasdaq. But if I was to ask how the deal is supposed to help the, I guess, the private market, is the answer still liquidity? Is that still the main draw as far as the market is concerned?
Yes, liquidity and distribution is the main thing here. That's bringing the main advantage in terms of the banks coming involved. Remember, the banks too have their own clientele, and they got a big database of accredited investors. So a lot of money will be flowing into these exchanges, and it's a win-win situation for the investment banks and for the exchange itself. So moving forward, Nasdaq private market will be a dominant player in this field, taking out the competitors.
All right. So what has trading been like in pre-IPO shares in recent years?
Coinbase and Asana are two good examples. Coinbase recently had their IPO early this year. And employees of Coinbase have taken advantage of this as well, because they've cashed in their stock options at high prices, and you have new investors as well willing to jump on the bandwagon to take advantage of these pre-IPO prices. And as you can see, the stock prices appreciated over a period of time. Another company, Asana, which is a cloud-based internet company, has done the same thing as well. So this IPO market is here to stay, and the Nasdaq private exchange is going to bring a lot of more companies who are taking their time in order to build up the anticipation of their floating their IPOs, and the transactions be much more faster and smoother with the investment banks involved. It's a win-win for both parties.
I'm curious, are there any qualifications or requirements for investors seeking to participate in the private market?
Yes, there is, unfortunately. Like in the US, you need to be an accredited investor, which what that means is that you need to have $1 million or just over 7 figures in liquid cash. And this is excluding real estate. It has to be liquid cash. And number 2, you need to have an income of a minimum of about 200,000 US dollars to qualify as an accredited investor to participate in this market, unfortunately.
Yeah.
I guess the equivalent will play across the pond, basically.
I see, $1 million at least. All right. The other players, you mentioned some other players in this space along with the Nasdaq Incorporated. How are they going to, is it competitive? Is the space, what Nasdaq is getting into here with the other competitors you mentioned earlier, is the space competitive? Is it competitive?
It is competitive, but Nasdaq will have the advantage. Unlike their competitors, the fees are very expensive. That's for one. Number 2, we have to understand as well that the transaction fees from buying and selling takes time with a lot of paperwork as well. Nasdaq has the advantage with the banks where the paperwork will be a whole lot faster. And number two, having the banks involved backing up the Nasdaq exchange will only bring more leverage. And you've got Silicon Valley and other investors from that side of that spectrum coming into play, which will literally put the competitors to bed. So I see Nasdaq dominating this market once this deal goes through. Clearly, we don't know the ins and outs, the fine details of this deal, but we definitely know it's a major game changer right here.
All right, and I guess for the big banks that are partnering with Nasdaq, they're just in there to collect fees and the like. Is that also putting Nasdaq at an advantage as far as the Morgan Stanleys, Goldman Sachs of the world?
Yes, as well, because when we look at the investment banks like Goldman Sachs, Morgan Stanley, and other banks involved in this on this platform, investment banks make most of their 90% of their income from advisory fees, and the rest are through investments. So you're going to get a lot of investors, they're accredited investors who want to get involved. Hey, we need advice. We want to get involved in this IPO. So that's definitely going to be money through on the books. And money for the investment banks will also provide money for the exchange as well, because transactions and costs need to be involved on the buy side and on the sell side. So like I said before, it's a win-win situation for both the investment banks and Nasdaq. And what this does now puts the Nasdaq exchange in a predominant place where literally it's hands down, they've cornered the market.
Very interesting stuff. We'll be looking to see how things play out in the space. Ayodeji Osibona, Head of Training and Development at AudaCity Capital. Thank you so much for taking us through this move being made by the Nasdaq. Appreciate it, Tracy. Thank you so much, Ayodeji.